Welcome, everyone. This is the CFU Insider live stream that we have. You're welcome to join, and we're also inviting people who are not current CFU members to join us. Today, we're going to be talking about the AI backbone, and welcome to the Angstrom Era. I'm excited about this to talk more about it. And today on the show with us, we have Will, as ever. He joins us today from the lonely country of Venezuela once more. I don't know. You must be using Starlink out there. I don't know how it's such a great internet connection.
Pretty much.
Yeah, exactly. All right. And we got Day Trader also joining us. Welcome back. This is your second time on the show. Happy to have you with us again.
Thank you very much. Excited to be here.
Yeah. So what we're going to do today is we're going to go over 4 stocks that help us dive further into this new era that we're entering into. If you don't know what the Angstrom Era is, this is when the chips for AI and GPUs go sub 2 nanometer. That's the next level down from nanometer. You guys are used to nanometer. Everyone's talking about 13, 8, 7, 5, 3, 2. When you go below 2, begin to measure things in angstroms. 10 angstroms equals 1 nanometer. And if you think it's small, you are correct. 1 atom of silicon is 2 angstroms. And so when we start talking about the size of these transistors, we are talking about how are we organizing the atoms of silicon and making the transistors that we need going forward. Okay, let's jump in. So let's cover the stocks that we're going to be covering today. I'm going to be covering 2, and then Day Trader is going to be covering 2 near the end of today's episode. ASML is a stock that not a lot of people know about, but ASML is a stock that is very critical in the design and the fabrication of AI chips, CPUs, GPUs. Why is that? Well, they are the sole producer of EUV lithography systems. Nobody else can actually make the equipment that makes chips. So we've all heard of Intel, TSM, like Taiwan Semiconductor. We've heard about Apple, how it has the M1, M4, M5 chip. Well, Apple uses TSM. Taiwan Semiconductor, they buy their equipment to manufacture the chips, to fabricate them from a company called ASML. They're the only company in the world that makes the actual equipment to fabricate chips. They own 100% of the market. And then on the other hand, we have Tesla. Tesla's, in their last earnings announcement, made it very clear that they're slowly getting rid of being a car dealership so much, as now they're going into this new era of using AI or autonomous algorithms and manufacturing to now manipulate our physical world. So I love this idea of AI in the physical world, robots, self-driving cars. And then we have on the other end, the manufacturer of the actual chips that are inside these cars, that are inside the robots, that are inside the space shuttles, that are self-landing, et cetera, et cetera. So I'm trying to go on both sides here, like who's making the chips and who's actually using the chips. So let's dive into Tesla. This is the company that I think a lot of people, or basically everyone, is aware of Tesla. Does anybody not know what Tesla is? Will?
I mean, they even know about it down here in El Salvador. So
I know. Have you seen in El Salvador? Have you seen one down there?
So what's interesting down here, this is BYD in Chinese import country. So Teslas don't really have a presence here. They're not big at Salvador, but BYD, it's changed my perspective about the AI car market, and I'm very happy that Tesla is doing more of a pivot into the autonomous, because I've ridden in the whole fleet of BYDs and driven most of them, and I've driven and ridden in the whole fleet of Teslas. BYD is a better product.
Okay, come on, now you're ripping at my heart.
But the autonomous side of Tesla can't be beat. As electric motors and just as a strict vehicle, BYD is there. But the autonomous side, nothing comes remotely close. And I've been in the new Mercedes that's almost fully autonomous. I have test driven the 2026 S500. So that is that's where Mercedes is, and it's crummy. It's where Tesla was over a decade ago.
So from what little I know about you, you're like a secret agent traveling the world. And now we find out you're test driving electric vehicles.
yes,
All
I'm Perry the platypus without the hat.
Excellent. So full disclosure, I love Tesla a lot. I own a Tesla Model Y Performance. It's a fantastic vehicle, and I do have the full self-driving subscription, so $100 a month. I love just getting in my car and hitting self-drive. Like you just pull down on the, what do you call it? I don't know. What's that thing called? It's like the drive shaft. That we're gonna have to edit.
Yeah, it used to be the transmission.
But I don't know what you call an electric car.
Yeah, it's like the gear shifting, but it's just like all the gears.
No, and you know what I said before, it's totally true. And I full disclosure, I have pretty sick.
Okay, here's the cool thing regarding it.
I love it.
So I get driving, I'm going down the lane, and I can put it in self-drive, so I don't have to do this. I don't have to drive myself anymore. And then you can flip it over to be in hurry mode, which I like to also call dick mode because it drives like a dick. It's like, it doesn't care who it's cutting off. It just weaves through traffic. And it's actually amazing to see this vehicle manage itself and actually be aggressive. It's not conservative when you put it into hurry mode. It'll go faster than the speed limit. It'll read the traffic around it, so you're not likely to get a speed ticket. And it'll weave through traffic, go into like off ramps. It'll go like, Will, you know this, like certain roads in our city. Will and I are from the same city. Yeah. So in our city, it'll take off ramps. Like as it's going down Deerfoot, it'll go on the off ramp onto Southland and then back down onto Deerfoot.
Yeah.
And it's as it's going through. I'm like, it's in city.
It fits in with the pickup trucks on the highways. And I love it. It keeps pace. It's fantastic.
Yeah. Day trader, if you don't mind, and I understand if you don't want to disclose what city you live in, but do you guys have a lot of Teslas out there?
Oh, yes. I'm actually in Silicon Valley. So we have a massive service center opening up probably within a mile of me. And I expect to see just waves of them coming over to this side of town because it's going to be one of the most significant, if not largest, service center, possibly even in the Bay Area. Okay. Yeah, Elon obviously has had a large presence in Silicon Valley, and there's a lot of Tesla owners here for sure.
Yeah. So right now, the Tesla that I own has an AI4 chip in it, and that's great. It does a fantastic job. It's able to implement full self-driving. When they go to the Robotaxi, that's going to need an AI5 chip. And then the autonomous robot, Gen 3 and above, is going to need AI6. I think I have it next if it's the idiot index. No, don't do that. No. What are you doing? Sorry. Okay, let's go to this one. I have the idiot index. Where is it? Oh, I had it. It's like, okay. Oh, here it is. The index. So, okay, this is where it gets really important and how the two Tesla and ASML work together. So Elon Musk has this idiot index is what he calls it. So he looks at the chip. So the inputs into a chip are the cost of sand and silicon and some other very basic materials. It's actually very cheap in terms of the input materials that go into a silicon AI or GPU or CPU. But the markup on this chip is 18 times. And it's likely even more than this right now, given how much demand there is for these AI chips. This 18 times markup, that's where ASML is getting a capture of the value chain. This is where TSM is getting a capture of the value chain. And then Nvidia is also getting some of this as well, too, as they're the designer of the chip. And Elon Musk looked out and he saw that, you know what, even if we went to our full demand schedule that we have between the cars and the robots and the semis, even if we paid full price, as this 18 times markup is, we won't be able to supply all of the chips that we need. And so it now becomes very much in our interest to begin making our own fabrication plants. So let's do TerraFab is what he calls it. So they're going to start actually designing their own chips. And that's what we just talked about with AI 4, 5, and 6. And they're going to actually begin making their own Terra Fabs. So they're going to start making 1 million wafers a month of AI6 and above. And so in order for them to do this, they're going to have to go over to ASML and say, hey, we need to buy one of your pieces of equipment to make our chips. This is the best and latest piece of equipment that is available right now. This is the ASML TwinScan EXE 5200B. Now, I don't know about you guys, but I don't know how I would go around marketing this type of equipment, the ASML TwinScan EXE 5200B. But you know what? They don't really need marketing on this. The thing kind of sells itself because it's the only tool that's going to make you a sub 2 nanometer chip. And so their clientele, it's like, we got to go to Tesla, we go to Nvidia, we go to TSM, we go to Intel, and we just say, hey, we're the only ones that's going to be able to deliver the chips that you need in the future. The cost on this machine is $350 million per machine.
Yeah, and they're like a semi-trailer long too.
Yeah, yeah, exactly. Yeah, they're not. I mean, they must be kind of cool to go inside and like work on them or hit the button and make them fabricate a new chip.
Years ago, when I was still out in the field, I worked in some of the fabs here in Silicon Valley, and I saw some of these things being assembled, probably early 2000s. I mean, I know that's a long time ago now, but they had the market back then for the lithography machines. Those are the specific machines that ASML makes that do the light etching on the wafers.
Yeah, exactly. And so when we go into the Angstrom era, this is the only ones who have the technology, and they have decades of R&D behind them. They have over 7,500 patents. It's going to be extremely difficult, if not capital intensive, to even replicate what they can do already. And Tesla, TSM, anybody else who's going to want to manufacture their own chips is going to have to come to them and say, hey, you know what? We'll pay the $350 million. In fact, we'll pay you $1 billion and we'll take 3, or maybe we can get a volume discount and buy 4 of these machines and begin fabricating our own chips. So that's the play. So Tesla has this massive demand spike that they want to have. And the only way they're going to be able to satisfy that demand that they have is to supply their own. And they now know that they have this economic incentive. They can shave this 18 times idiot index down to something like 4 or 5. They have to pay the toll booth, so to speak, to ASML to be able to have this business capability within their walls to now fabricate their own chips. And then they can test out new things, make some mistakes like Elon Musk likes to do, fail fast and fail often, learn your mistakes, and continue to make fantastic robots, autonomous vehicles, whatever that might be in the future. I don't know, Will, do you got anything to add on that one?
Nothing to add. It's when you need it and they're the only people making it, it's a license to print money.
Yeah, and especially when like Elon Musk, the cool thing about a founder of that company like we have with Elon and Tesla is they have enough clout, power, and ability to put enough capital and a bet of the whole company behind on where they want to go. And he kind of did that in their last earnings, or when he said, you know what, we're going to stop the Model X, we're going to stop the Model S, we're going to make that plant now do autonomous robots or the Optimus robots. We're going to go and make our own chips, and we're going to have to go to ASML to do that and make a massive pivot. Ford or GM or Stellantis, Toyota, they couldn't make that kind of a move. They don't have the gumption. They don't have the prior experience. Like when this guy, Elon Musk, says, look, we're going over and doing robots and robotaxis, and they're like, you're not going to be able to do that. He can say, dude, I landed a rocket in reverse. I can do this too. Yeah. And so
Tesla has the executive willpower with Elon that those other companies don't have. They're more board based.
Yeah.
The decision making is more decentralized, I would say.
Yeah, exactly. Right. Like, yes, Elon Musk has to report to shareholders, but those other companies like GM and Ford, et cetera, they feel more responsibility to the shareholders, so to speak, and not almost the best way, but like they feel like they have to continue to pay their dividend. They have to continue to pay their pensions, and the unions, like they're really held back. They couldn't have made a pivot like this. Like everyone's pivoting out of EVs to some extent, right? Like they're changing where they're all going from a full scale pullback in some cases to Elon Musk saying, yeah, we're going to pivot a little more down the autonomy path and make that. They're still going to do cars, of course, but they're definitely going in a different direction, I think. Right. Yeah, so this is the compute chip. So what they have to do, so why do you want to have this really small atomic sized chip? The Optimus robot, and looking at this robot here on the image, it's almost kind of creepy. But the only way that you're going to be able to power these for 16, 18 hours is if you have a chip that's extremely power efficient. The smaller you can get these chips and the transistors inside them, the more transistors you can put on, the more intelligence you can bake into it. But also, too, it's less electricity that's being required in order to power and make the decisions. I don't know what law of physics or thermodynamics that is, but the smaller the transistors, the less power they actually really need in order to flip on and off and do their ones and zeros. Like we've already kind of said, so Tesla has a massive demand, and then this is really good for ASML. So they don't have as many cycles up and down, and they can kind of go forward and have a constant, more consistent demand schedule in front of them. This is going to be really good for them to actually continue to do R&D and research into how do they get even smaller, and what do they do once they've kind of reached that physical limitation of we can't go smaller because we're now at the atomic size of these transistors. So that gives them a lot of research and runway in order to get going. And, what are the chips going to be like in 2030? And what are the chips going to be like in 2035? So, day trader, take us on down. Now that we're talking about power and getting those chips down to a smaller size, take us down this path that you've got us going on here.
Thanks, Stephen. Yeah. So what I'd like to discuss is another side of barbell concept, which is, we have the demand and the mechanics of semiconductor manufacturing with Tesla and ASML, but I'd like to pivot towards an area where I have some expertise and concentrated exposure, I guess you could say, and I pay particular attention to in the market, and that's the electrical infrastructure demand that all of this is creating, both on the semiconductor infrastructure manufacturing, but also on the utilization of the AI, which is the data centers that we see so much about in the media these days. So on the slide right here, we have some text that talks about, how the grid is basically up until these last 5 years or so been built for a different kind of economy. And so in that sense, you may see that basically every data center that's going in now has to seriously consider how they're going to connect to the grid and whether or not they need their own branch off of the existing grid all the way down through their own new substations. And some facilities are being built with renewables as well. So what this does, if I can go to the next slide, is it creates massive shifts in the power density requirements around the country for the grid. Some facilities are choosing to be built next to existing generation, but other facilities are having to produce their own on site. All of this creates demand on what I'm going to focus on with these two next tickers, which is transmission, distribution, and utilization of electrical power and the materials and systems behind that. High level. Go ahead.
What do you have here with the legacy data centers versus the AI facilities? An AI facility has 6 times or 10 times more power demand?
Yeah. So I've been in the industry, the electrical industry, for 33 years now. It's amazing to say it out loud, but
Yeah.
I worked on my first data center in 1997, I think it was, here in Silicon Valley. And it seems quaint and cute compared to what they're doing now. And the servers inside are totally different. So the demands that are being placed on LLMs, and then like what you were talking about so much in the first part of this presentation about the robotics. I mean, these machines, whether they're cars or robots or semi trucks, they have to have a lot of sensors. They have to have a lot of processing speed, and then they have to have the ability to act on those signals instantly, near instantly, right? So it just creates a whole nother level of semiconductor demand, and all of those are loaded inside of these AI servers in these racks, and that's what bumps the power demand up 6 to 10 times.
So I think what you're talking about too, so it's got to be able to compute, you're talking about the sensors, and it interprets the real world, and then it has to make a decision. And I think what you're talking about there, like the ability to make a decision based on the data that it can sense and the language model that it has as a database or reference, that ability to make a decision is called inference. And that's where the next leg, or that's where the next kind of leading edge on AI is this ability to make a decision and guess and make predictions and make that next logical leap. Is that correct? That inference model?
Yeah, absolutely. It's a completely different kind of demand than we had when we were building the first data centers, or even the legacy data centers that are out there right now that are 15 to 20 years old. They're in some cases flat out not capable of doing the work that is demanded right now. And the buildings will need to be completely rebuilt at some point.
Yeah. And then, so you're talking about the power per rack. Is that including the cooling and any other like extra demand that goes in, or is this just powering the rack, or is that the entire equation of that's to cool it, power it?
I think when you're thinking about your question, think about it as proportional. Okay. So what if it doesn't include, if the 30 to 100 kW is not power or not the cooling power, whatever that increases over the legacy data center cooling requirements, it's going to be exponentially that much as well. So, I mean, there's lots of different technologies involved with the cooling as well. They're talking about liquid cooled servers. They're using, I think Meta just did an order with Corning, the glass manufacturer, for they want to make their own internal fiber cables for use between the racks to make the data transmission even faster rather than using copper. So the way I understand it and the way I visualize it is, because I'm an electrical guy, is sensors are accepting inputs, and then they have to have the processing of what the signal means, and then the output mechanism, whether it's accelerating on the road or lifting an arm on a robot or whatever it is. All of those things, the faster they require the logic, the greater the demand on in my experience, the greater the demand on the power and the more sophistication required on the data center. All over. And in theory, there needs to be a distribution of these around the country and the world. I mean, they're talking about going into space.
Yes.
To be able to cover where all of these needs are.
Yeah. And I think even if they do go into space, there's still going to be demand on the ground for data centers. So I don't think it's like, oh, once we get into space, we don't need the ground data centers anymore. I think the space will be used for more not as quick decisions that need to be made. That latency of space to ground, that's not the most critical part of this decision matrix that we have to go through. So we can do that at night or a little slower. And then the more critical, time intensive, yes, this needs to get done right now, that they can have that data center here on Earth, and they'll still need to have this power grid that you're talking about here. And I also heard somewhere there was like 7 or 8% of all power demand now goes to AI data centers. I don't know how true that is, but it's like they're actually a substantial demand now is just going to power data centers across North America.
It's even here in the United States, there's even pushback to some of the data centers that are being proposed and going in because the pressure that's putting on not just electrical utilities, but water as well. So crazy. It's a complicated issue, but the demand is insatiable right now. I think we've all seen the CapEx estimations that the big Mag 7 companies have been talking about over this last earnings cycle. I think, what was it? Amazon is planning on spending $200 billion. That's what we're talking about. Let's go ahead and advance to the next slide.
Yeah, it's like more the CapEx expenditures they're talking about are bigger than some companies' market caps.
Yep. So here it is right here. This is that barbell framework and kind of like a flywheel effect. So you have semiconductors creating compute creating demand, power demand, creating infrastructure spend. I know I read the slide there, but that's basically the bulk message of this slide. And, I think I've got a handful of companies that I consider to be prospects. Some I hold, some I'm watching for entry positions on, and I'd like to present 2 of them to you guys.
Okay, let's get into it. Yeah,
All right. So first one is nVent Electric, and this company, they do so much. They have bought a bunch of different separate companies here in the United States over the last few years. One of the most recent purchases was a substation control enclosure manufacturer. So these buildings that you see on substations typically are prefabricated, and nVent bought one of what I consider to be the best companies in that industry. in that subsector, and it further adds to their. If you went to an electrical supply house and tried to buy an nVent product by that name, there wouldn't be any. But all of their subsidiary companies are, as far as my experience goes, top-notch companies. We're talking about Hoffman Enclosures, Trake's substation, or Trake's prefabricated buildings. I think they make the Caddy brand as well, which is another electrical material company. So this company right here provides like the full suite from the transmission all the way down through the actual receptacles that you would plug into. And they make components everywhere in there. And they have a strong balance sheet. They've been absorbing other companies like I've talked about, and they have a strong outlook for next year. I've got some analysts suggesting price targets around 125. Current price is around 112 or so, and other analysts have it all the way up to $150. Year to date, up around 9.5%, and we're looking at in 2025 they had a 48% rise. So anytime a company is up at its all-time highs, like this company is, I suggest looking for pullbacks, and I think there's strong support over $100 a share right now.
I'm just trying to bring up their chart. That shows up. Okay. Yeah. So walk me through this one a little bit. So they're at, so $113. That's their all-time highs right in here at the 120 mark.
Yeah. Yep. They hit highs here recently, looks like right before earnings. And then there was a little bit of a sell-off, but it caught support at your moving average, your yellow moving average there, which is 107, it looked like. And so, like I said, I think anywhere, if you can get an entry anywhere between 100 and 110 for normal macro conditions, it's a good, solid place to add. I think it would take something pretty major and unusual to get a pullback down around 95 again, like we saw like in December there.
That's good. And they got to pay a dividend. Payout ratio is real small, so they're obviously trying to grow that company a lot and not pay out at all, to not pay as much out. So let's go to optionstrat.com and see what we can pull on for them. So can we do a cash secured put on them at a decent price? Yes, that's not bad. So 105, we're getting $330 for it. Is that going to be a wide spread? No, it's not too bad. I mean, it's getting an alarm. Oh, it's on the volume there is pretty low.
That's on the March. Yeah, it's not a real high volume ticker as well. So, it's not real flashy, but it's a workhorse.
Yeah, I mean, you could sell the 100 put for 520. And that's an opportunity just to kind of like get in at a lower price. And like you're saying, wait for a pullback. You can get paid while you wait for that pullback on it.
Yeah, it's pretty good.
Because $100, that would come in right at around that area there, which would be, not too bad. That'd be at around support, right? This area through here.
That's what I'm looking at. Yeah. 100 to 110.
Yeah. Good. Right on.
Okay. Let's go to the next slide.
Yeah.
That's another company I consider to be critical in the expansion of the grid and primarily transmission and distribution. Hubbell is one of the most recognized and trusted brands in power distribution, and their chart is staggering. They have real strong growth. It's real steady. It's not flashy. HUBB is the ticker. Current price targets are around 505 to 530, but it's seen a 17% run this year already, which has hit those targets. And I'm looking to the higher range that I consider, which is about 580 is where I think it could be in about a year. And so in 2025, it had 10.5% overall. So it was kept up with the S&P essentially. But I think with what the CapEx spend is for the major hyperscalers over the next year or so, especially on the projects I've been working on, they all have Hubbell products one way or another. I feel like they're going to have continued demand throughout the rest of this AI build out that we're seeing, which I think is going to extend for the next 5 to 10 years at least. So if we can go to the next slide, we can see the Barbell, which would be ASML and Tesla on one side and possibly NVT and HUBB on the other. And I think you'd be well positioned to capitalize on the gains that are going to be had in the next 5 to 10 years.
Yeah, I like that. Hey, so you got ASML and Tesla on the one side here, whereas Tesla's, making the final product or the ability to manipulate the real world, so to speak, with the cars and the robots. ASML is providing the equipment in order to make the chips that power these robots and these autonomous driving vehicles, semis and robotaxis. And then NVT and HUBB are here to say, hey, well, you're not going to go very far unless you have some power generation on that. And so we're going to be the ones that, do the infrastructure for those data centers and those build outs for them there. So transmission and distribution. So what about like the pure, like the power generators? Like, I don't know if there's any, like you're in the space, is there a really good clean energy producer or a leader in that space that we should be looking at as well too, to go with them?
Yeah, I mean, if you're talking about companies that are building substations and building renewable energy facilities, I would think NextEra Energy is going to be one you should be interested in. They build both. Actually, they own, if I'm not mistaken, they own Florida Power and Light, which is the utility for the state of Florida. And they have a large presence in California building battery. But they're basically large scale batteries that can be put in alongside or independent of solar facilities where they collect the energy during the day and then store the energy to be distributed at night. Those are going in all over California and Nevada, Arizona, if I'm not mistaken. And NextEra is involved in the production of those. And I would say that Vistra Energy, they're also well positioned. I think they signed a huge deal, I think in Ohio, to build or Meta and supply like
Sorry, did you say Vistra?
Yeah, Vistra
Yep.
VST.
Yep.
They've had a significant pullback from above 200 down to around 150. So they're another large player that I see around. And as far as the generation goes outside of renewables, one to watch is it Genova or what's GE's spinoff that they just did? It's GE did a spinoff. They spun off where they're making their turbines. You guys know of that one? I can't think of that ticker right now. But it's one that I'm watching, forgetting it right now.
So if we go back to NextEra,
Yep.
we issued a trade alert on NextEra today. It's kind of at the open here, so it would have been around here. We entered into a new option trade. Kyle, one of our best option traders, told us to jump in on that one here. We have an unlimited upside here for a year. And even some traders got in this morning and they were able to get out even the same day for $100 profit, quick and easy. That was pretty impressive to see them do that. Yeah, this one's definitely on our radar. We've traded this ticker quite a few times already on a few credit spreads, and now we're doing some bullish patterns on it as well too, to get more upside potential and participation. You can see that. Look at this like bull flag. I'm sorry, I'm kind of losing my speech here, but it's that bull flag right there, and it did nice consolidation as it went, and then it broke up again to the upside here. So that would have been one of the patterns we were looking at as well too.
Yeah, from when the leap, I bought the leap this morning from Kyle's alert. We're up 6% on the day, but I think the leap is and room to run still. So
yeah, let's bring it up. We can show everyone this just so they know we're not. Some
You
reason
could get some nice premium on selling a covered call against those
on which one?
on the leap. Selling is that a poor man's covered call at that point?
Oh yeah, you definitely could. Yeah. Yeah.
Oh, yeah.
Do that. Sorry, I'm just trying to load up Discord over here. Yep. Sorry, I know this is totally off screen, but here we go. So here we did NextEra right there. We did that this morning. That was insane. And then we had orders that were coming through, members filling it out. Yeah, got out quick $100. It's crazy. Yeah. So yeah, we're in on the next territory. So some members are still on that experiencing, and we'll get going through. And I think there's a lot more upside here to go with NextEra Energy. The leg up should be at least the same extension as this one here. So if we did that, that's where it ended. So if we put that over here on this, so we should be able to get up to here at least. Well, that's not as much. We should be able to get more than that, though, I think.
Yeah, I've been long shares on NextEra for a while. When I came over to work in the substation division at my company about 3 years ago, I saw what they were doing, looked into them, and started adding back then.
Nice.
So if we get up to 100, we'll be at a probably napkin math up 20%, Stephen.
I'm sorry, I was trying to do. Yeah, we should be able to get the 100 mark area pretty easily. Like that would be because we just need to break the trend line here. So there's the top, right? Where I did the bull flag. So there's the flag pattern that it generated. And there's the pole on it. So that's the bull flag. And then you copy this one over. So yeah, we should be able to get up into $98 or so. So $100, we'll be able to get that. Yeah, depending on how quickly we can get to $100, that might even double our money on it. Maybe 80%. Yeah, that'd be good. Okay. So getting back here, I think, this is, I love this. Okay. So this is the WCF moment of the week. As I was prepping and getting together all that information on Tesla and ASML, I came across this. So if we do a 30-mile trip in Austin, it costs about roughly $75 in order to get an Uber driver. And he's right here, right? If you follow my mouse, he's driving this lady here 30 miles in Austin. That's going to cost you $75. If you did this in your personal Tesla, so this is the lowest cost today that you could do that same trip. That would be about $17. Most of that is depreciation and insurance. The electrical cost is about $1 to go 30 miles. The Tesla Robotaxi with no driver and you don't own the equipment, it's going to cost you $9 to $15 to do the same trip. So it's incredible. It's like, why would you own a car? Some people would just say, well, I like the convenience. I like to be able to go when I want to. And, I'm just doing small trips just to the grocery store and back. I got you. Yeah, totally. You're probably going to buy your own car. But now it's a decision of like, maybe I don't need a car. Maybe I don't need to pay the registration every year for my car. Maybe I don't need to have a license anymore. I just all in the total cost of not having a car is so much more convenient. I don't have to do the maintenance. I don't have to swap the tires. I never have to worry about anything. If I get in an accident, I'm not going to have a lawsuit against me. I just sit in the car and it takes me where I need to when I choose the Robotaxi. I don't have to pay for parking when I get to the end of the trip. If I'm commuting 30 miles a day, or I don't have to pay for parking anymore. There's a huge
tires.
Yeah, like I don't have to worry about brakes. I don't have to worry about oil changes. I don't have to worry about the battery degradation in the Tesla. Like there's a lot of upside to, hey, I just paid $9 or $10 a day each way. It's $20. That's lower than some cities' parking costs. And it's just a lot more convenient. You never have to worry about this. So it's not so much that the Robotaxi is going to replace Uber or Lyft. Like that's a foregone conclusion. Like Uber and Lyft have to get into the autonomous driving themselves in order to survive. So Uber and Lyft, in terms of a paid taxi type driver, that's done in 5 or so years. But now it's going after the next level down, which is the personal driver. Now you have to start making an equation. Is it worth it to own a car anymore?
Well, and Stephen, let's talk about this part too. Imagine you're towards the end of your life. You don't really want to hump groceries up and down the stairs. So you call for your Robotaxi, come to be sent out with an Optimus to help you take your groceries upstairs to the house.
Right? Exactly. So what you just outlined there in terms of the total use case. So if I'm 85 years old, I'm not the best driver and I can't lift my own groceries, but I still want to live alone or I still want to live with my wife. I don't want to have to go into an old folks home. This solution of Optimus plus a Robotaxi just extended the quality of my life. I can live another 10 years on my own. The Robotaxi gets me around town and my Optimus robot, who's like my dedicated chore boy, he does everything for me. And if I get into a sticky situation, the Optimus can call 911 for me or call my son who's like 30 or 40 years old. So there's an incredible upside. That's why I'm like so bullish on Tesla, where it's like, paint me a use case and they almost have a solution for it and improving the quality of life of a lot of people.
See, I can't wait till we can get the Optimus robot to follow Kyle's 2 trading channels. And then I don't have to pay attention to it at all.
Okay, so
I mean, talk about that being the ultimate flywheel.
Talk about that. Yeah, no, exactly. I don't even have to trade anymore. Optimus, just quality.
Look, now I just show up in the Discord.
Yeah, exactly. Optimus, go get on Discord. Go do my see a few trades for me, and pay for yourself, Optimus. It's good. So I just love that. And then just like, bye-bye Uber, like the whole thing of having a paid driver, that's gone. And then like, even like with the delivery of like food, I don't know what you guys call it down in the States, if it's DoorDash or what you guys, it's called DoorDash Uber,
DoorDash, Uber Eats are the two primary ones.
right? Like the car's driving around and this needs a robot to go get the food and bring it into the car and then bring it to your place. So speaking of all those awesome trades that Will was speaking about, so CFU is a fantastic Discord trading community. We have an introductory starter kit for anyone who's interested in learning how to trade options, how to trade alongside with Kyle, one of our best traders, or with Uzi, or with myself with the system trades. But then also too, we are going to start a competition here where we're going to see who's going to be our next pro trader, and we're going to pit our best member traders against each other and see which one is our optimal best trader that we have. If you would like to join our community, one of the easiest ways to get started is to go to joincfu.com/starter-kit. Joincfu.com starter kit. We have an ebook available for you. It's completely free. It's about 30 pages long, gives you a nice introduction into what options are, what they mean, how to trade them. And then we also give you access to one of our 4 scanners that we have, which looks for some really high probability trades for you. That's also completely free. And then also too, you can jump into our Discord community. At last count, we had 1,047 option traders in our community. I think we've actually just crossed 1,050. We keep on growing every week. Come on in, see some of our free trades that we do make available for you. You're not going to get our premium trades like that NextEra one, but you'll still be able to get in and see how we do trades, see our formats, our trade alerts, and discuss any question that you have. You're open to ask us anything and we'll help you out. No obligation there. And then you can see our members traders. We're getting ready to enter the competition, and I'm really excited to see who's going to be our next pro trader. Will, are you going to enter the competition? Are you going to be one of our competitors this year?
No, I'm not. I am not. My trades are not. They're different because of the account size, and we're just
okay. So I think
I do lower premium, lower risk, and a large number of contracts. That's not going to work in the contest format.
It's not going to work in the contest. So you're our guy who loves to come to CFU, and we do the heavy lifting for you. So we do the analysis, we do the homework for you. You come in as one of our dearest members that we have. You've been with us for a long time. You like to leverage our homework that we do for you.
Yeah, I look at your homework and I take 80-90% of the trades. I don't have a life that enables me to sit in front of the Discord for trading hours. They're all trading hours. So most I hit, and sometimes a great trade comes in. For example, this what we did today at NextEra. You want to be there when that launches. You don't necessarily want to be there after the stock is bumped. So that's why I only take 80% or so. Sometimes I'm at lunch, come back, the window's closed, and that's okay. There's nothing wrong with that. You still do very well with time. And
yeah, exactly. Yeah, and so then you're able to set alerts on the specific trade channel, and then when we post an alert, such as Kyle today with NextEra, you get an alert on your phone, you get it on your watch, you get it on your laptop, and then you're able to just jump in and follow along in that trade.
Jump on the trade and then follow it to conclusion. And every trade, correct me if I'm wrong, but every trade also has an instruction where you can close the trade at the same time, so that if the position swings to a very favorable spot and you're not at your desk and you're late on the alert, it'll automatically close and lock in your profit.
Exactly. Yeah, that's exactly what we do is we give you like a suggested exit limit order as well too, to exit the trade for profit.
So it's very
Day trader, are you going to jump in on our contest? Are you going to become our next pro trader?
I don't think so. I'm in a similar situation where I follow the system trades primarily. I haven't really even expanded out into Uzi's or Kyle's trades to date. I'll just say it that way. I think I probably have one of the more modest accounts in the server, and I'd really only go one contract at a time. And I don't take every trade either. And sometimes I fail when they're going against us too much, and I cut my exposure because I'm just not comfortable with the high exposure on some of these names. Like with CW, I looked at it. Let me see if it's still open. I bailed on that one a long time ago. I realize I'm locking in a loss, but we all have to manage our accounts the way we see fit.
Yeah, no, that's a good point too. And so, like, you know, Will's coming in with his large account. You have a modest account. We have people who have a very small account, and we can custom tailor your needs to how you want to trade within CFU. So if you're on the smaller side, let's say you're coming in with a $5,000 or $10,000 account, we would recommend to you to just trade one contract per trade. Don't do every single trade that gets posted. Start with the really small, easy system trades that we have on Options Action. That's a really good way to kind of warm in and see how we're doing with trades. And then it also gives you full access to all of our different discussions as well, too, and analysis that we're doing. So you can see how we do charting. You can request stocks to be charted, and our professional trader, Uzi, he'll chart it out for you and give you suggestions for entry and exit. And so it's a great way to even just start trading options and just kind of warm up to how we do things. So we do offer this new starter kit. It's completely free. Go on over to joincfu.com starter kit joincfu.com/starter kit, and you'll be able to jump in and get started with us today. Guys, we're at time. We've been going for 55 minutes. So I think to be respectful of your time and ours, let's wrap it there. Will, thanks for being with us. It's almost midnight there in the Middle East.
Get it close.
I don't know. It might be even 2 in the morning in the Middle East.
You never quite know. So
One of these times you're going to be jumping on our live stream from like a plane, from your corporate jet, from your nice G6.
you'll stranger things have happened.
Yeah, I mean, you know, in today's day and age, there's no way you can't have high-speed internet, even on a plane.
I have been on a plane with Starlink.
Yeah, there you go. See, perfect segue. You almost read my mind. Actually, you did. You're living in my mind rent free. So the new iPhone. So this is my iPhone that I have. Yeah,
Okay.
love it.
Yep.
The iPhone. This is what's it?
17.
Not the newest one. 15. It's a 15 Pro Max. Just normal, whatever. So the new iPhone, I think the 18. They're looking to try to get the 18. Oh, see, now you're just flexing on us. You're just showing us the biggest and best iPhone ever made.
It's trickle down economics. I buy the newest one every year, and then
You're at the very top of drill down.
And then the next, well, it trickles down through my company. All the staff have relatively new phones this way.
Yeah, you own the company. You're the guy.
Yes.
Yeah. See, I see. So you're the CEO. Trickle down. You always have to have the newest iPhone. Okay. This is where I'm going.
I have the newest one, then my daughter, then the staff.
Okay. So and then your dog has what? No, the new iPhone, the iPhone 18, that's going to be connected to Starlink.
Yes.
So how cool is that? That on the surface, that might sound like, oh, ho hum, I don't care. No, it's really cool because my iPhone will work global. Doesn't matter where I'm at. I could be in the mountains and I'm going to have cell connection. So I could be on Mount Everest where there is zero cell phone right now. So with Starlink connection, I can text from the top of Mount Everest. I can send a selfie from Mount Everest.
And what game changer it is for some of us in Canada. We pay the highest cell phone rates in the world.
Exactly.
Highest in the world. And I keep a full-time plan in Canada, a full-time plan in the United States, and a full-time Central South America plan. I pay for 3 full-time plans because otherwise the roaming and the data blast me back to the Stone Age. New iPhone, Starlink, that's it. One device. I'm almost completely indifferent to what the cost is on that because I'll be able to nuke that, and frequent business travelers keep accounts in Europe and in North America, and soon you'll be able to just drop it all and have one. It's going to be an outstanding thing.
Yeah, no, and then like look at the other use case where I'm in my SUV, we're going on a road trip. My kids are in the car and they're all trying to get connection and stuff. So when I'm on the road and we're going through various states, different areas of America, they just got Starlink connection the entire time. It's so much easier. And they can stream nonstop. Who cares?
Yeah, absolutely.
Yeah. So
you get your CFU trading alerts.
It's important. Yeah, you don't want to miss those.
You miss a leap that could cost you. You miss a good trade from Kyle on a leap. That's a couple $100.
That's a couple $100. Day trader, what's your favorite trade we've ever done?
Probably TSM.
Which one? We have done quite a few TSMs.
System trades.
Yeah.
Probably favorite hard to say. I think I like them when they're like one shots more than the long rolls, but sometimes the way some of these rolled trades have come around has just been amazing to watch.
Yeah.
I think maybe one of those would be.
Yeah, I hear you. Yeah, I like it when, yes, I mean, everyone likes it when it's a one shot done and deal, and those are the best ones. Some of the ones that do take a few more rolls to get completed, sometimes they end up being just a little less profitable than the original intent of the trade, but sometimes they end up being more profitable. We went through this in a live stream with Elf. We entered into Elf for 140, and because of the 2 rolls that we did with Elf, we ended up exiting for 247. So that was a cool, the rolling can actually amplify the return and give you more in the long term on it there too. All right, let's end it here. We are 10 seconds away from 1 hour being on. Thanks, guys, for hanging out with me today. And we will get in touch maybe next week. I think we still have another one to do on high yield ETFs.
High
yield
and ETFs.
Yeah.
And high.
I need Dega on that one. For some reason, I think he really wants to get into that. And
Dega, and hopefully Russ can join. He's
Yeah.
got some good perspectives on that.
Yeah, I would love to, if we could get like Yield Max on with us one time, I would love to just pick apart ULTY and just get into that and just how does that actually work? So love to get into it. So let's try and get that for next week. Everyone, thanks for being with us for an hour. It's been great hanging out with you all, and check us out. We'll see you guys next week. Thanks, everyone.
Thank you.